How to invest in private equity with little money. Think private equity is only for millionaires? Well, not anymore. Let's talk about how to invest in private equity, even if you're starting with a small amount of money. So what is private equity? Well, private equity means investing in private businesses, real estate, or funds not traded on the stock market. It used to be locked away behind high minimum investments and exclusive access. But that's changed. And retail investors now have real opportunities. What's considered little money? Well, we're talking about starting with $100 up to $10,000. If that's your investment range, there are now platforms and structures designed just for you. One of the options is crowdfunding platforms. So there's real estate platforms and startup investment platforms like Fundrise, Start Engine, Mainvest. These platforms can let you invest for as little as $10 to $500. You can access private deals, earn dividends, and build diversified exposure over time. Option 2, Reg A and Reg CF offerings. These are SEC-approved ways for companies to raise money from non-accredited investors. You can invest through these offerings without being ultra-wealthy. Look for them on platforms like Republic or directly from real estate sponsors themselves. Option 3, interval funds or tender offer funds. These are private equity-style funds designed for public access. You can buy into them through traditional brokerages. The minimum investments are low, liquidity is periodic, and you get professional management. Option 4, self-directed IRA accounts. If you have an IRA or Roth IRA, you can roll it into a self-directed account. Platforms like Alto or Rocket Dollar let you invest in private equity through your retirement account. This means no taxes on the gains inside that account, which allow you to compound your wealth quicker. So what do you need to watch out for? Private equity has risk, especially with smaller deals or newer platforms. Always research the sponsor, the investment structure, the exit strategy. Avoid putting all your capital into one deal and diversify even with small amounts. So I recommend start small, learn fast. Start with what you can afford to lose first. Use early investments as learning experiences. Clearly read the offering documents. Read the investor updates. Understand how the investment pays out. This is how you become a smarter investor over time and make better decisions. So private equity is no longer off limits to the average investor. Even with a limited capital base, you can start building exposure, knowledge, and long-term wealth. The key? Just start small and grow as you go, learn, and make better decisions. So if you want a list of vetted platforms and beginner-friendly options, download my free guide, the Private Equity Starter Kit for Small Investors. Inside it, you'll find different deal types, categories, the investment minimums, the risk tips, and the platform links for you to explore deeper. Check out my next video on how to vet a private equity sponsor. I talk about it as the jockey and the horse. You're going to want to know how to vet the investment and the person running it. This way, you don't get burned by the wrong operator. So check out that next video.